we are quite cheerful on China. We are quite positive on China, the prospects for China over the next 9 to 18 months, especially with the reopening and what we're seeing with, a good comeback in economic data from China. We think that's going to be quite supportive for the markets. We've seen inflows going back into the equity markets, and that's likely to persist, especially when you're seeing the rest of the world slowing down and China's picking up.
Mary, does that mean that more broadly you are very positive on EMs as well? Because, I mean, China is the 800-pound gorilla in the EM space.
Absolutely. So one of the key things that we've been focused on in terms of our investment strategy is about going east. We think that we're going to see an earnings recession in the U.S. We've already seen 1 quarter of negative earnings in Q4. We're going to likely see another quarter of negative earnings in the U.S. in Q1 for 2023. So that being said, if we're seeing that China is coming out and China is reopening, then of course that we're going to see that ripple effect really come through into emerging markets. So we've been adding risk into emerging markets. We've had risk on for quite some time into China, but now it's more about also shifting into EM as they're likely to benefit from the prospects of growth in China.
Hi, Mary. Can we circle back to Taiwan and bring in Berkshire Hathaway again, which went big on chip stocks in Q3, then immediately next quarter slashed their holding. Is that a nod to the cyclicality, and how then should we approach the chip-heavy South Korean market and Taiwan?
That's a key thing, especially when it comes to for chips. It is very cyclical, as you mentioned. For us, we don't look specifically we look at the broader markets, at the broader sector. So we'll look at things from, South Korea equity, Taiwan equity. For now, we think there's better opportunities elsewhere. So we think broader emerging markets should do better. Where we were before when it came to Korean markets and Korean equities was really at the start of the reopening of COVID back in 2020, end of 2020 into 2021, where South Korea did really well, especially as you see a stronger cyclical performance. It's hard to be quite bullish on South Korea when you're seeing a broader downturn, let's say in Western markets. So for us, we're looking at broader EM, but specifically on Korea, it's going to also be about chips and the semiconductor industry. So for us, we'd rather just go somewhere more broadly that's going to benefit from what's happening in China.